What's going on, family? It's Mr. Bilbo Baggins. Now, last time we talked, we were here looking at some live price action, and I told you when we got to 30 subscribers, we would basically, we releasing the second part of that video. So now, we didn't actually make it there. We're at 29, so shame on y'all. But I don't want to keep our waiting too long, so we're gonna go ahead and get back into that, and I'm gonna show you price action that you do want to focus on. That way, you're not getting caught in bad trades, and losing money.
And when I do this right here, like I'll mark stuff up just to give myself an idea. Like if I was in the trade, how would I be like thinking about it? So like right here, if I had entered this, basically what I saw was like a small sweep above this candle, and then we engulf this area with this imbalance. So I know that from there, like sellers gave an indication to want to go lower. So and that's the beauty of like market ordering and like versus limit ordering, because you really can't take advantage of moves like that, limit ordering, unless you set your limit like right here as soon as it. And I would classify this as a sweep rather than a break. What it did here, you see it barely came above, took liquidity, and then ran. Actually, grab a cup. Anyone have any questions? Oh, quiet. You're scaring me.
I just got people in and out of my office.
Okay,
so.
okay. Gotcha. Yeah, I mean, my setting can't be too much better.
So go through what you'd be looking for before you take your actual entry.
So before I take my actual entry, like now, like so really like usually like I can take something like this, bro. And that's why I knew today wasn't gonna be the best trading day. So usually like when I see this, right around 9 o'clock, bro, if I see like this candle just got broken, this candle high broke, and then we engulf below there, right?
Okay, so you got that engulfing bearish.
So right here, let me pull up my annotation. Like I see like this candle get broken, this candle get broken, right? So like in my eyes, like those are like sweeps, like this. Like, every time it does that, it's giving me another sweep, which is just a, take above a high or low, right? Now every time I see that, all I'm waiting for after I see like a sweep over here, it doesn't matter. I'm looking for whatever low caused this sweep to get taken out. So right here, this is the low that caused a sweep of that high. So once that gets taken out, this candle gets validated as supply. So I would literally take an entry once it retraces in there, and then sell down to here, and I'll be targeting down here. But because of where we're at on the chart, so one thing I'll do before the day, and this is like day by day, week by week, I will mark out like the lows, of the previous day, because at the end of the day, the market's just hunting for liquidity. So this was yesterday's, or this was yesterday's low right here, right? So if I see that yesterday's low didn't break, then there's only one thing that we could be doing, heading towards Tuesdays, or sorry, yesterday Tuesday, yeah.
Today's Wednesday.
Today's Wednesday.
Yeah.
Okay. So basically, yeah, we're heading toward Tuesday's high. So the previous day's high. Why? Because we failed to break the previous day's low. We know that if a high fails to break a low, then the high becomes targeted. So this high came all the way up here with all this momentum and failed to break this low, which was not the previous day's low. But if we don't break that low the next day, then that low is still there. It's still relevant. It just forms more confluence, because if we break that, I'll show you an example of like how to use that idea. It's like right here. This was Wednesday's high, right? And then the previous day's low. But this was Tuesday's high right here, right? So when Wednesday's high failed to break Tuesday's high, then we know that we're targeting Tuesday's low, right? Because this low failed to break that high. So literally I'll find an order entry, as long as it lines up with my time that I'm entering and stuff. So this is right around 9 o'clock. So like right around 9, I'll be taking a sell and targeting here. But right now, it hasn't given me any, like, this will be my target up here. But really, I'll be targeting this first and this first before anything else. And this is where I might pull out my range or my fib tool as well. I'll be like, see this imbalance? I might bet price could pull all the way up here. Or it could just pull up to like right here. Or it could pull up to here. But I don't draw, and that's why I don't draw fibs out like that. But I can just see the range as to where it wants to play first. So instead of using I'll put this fib up here because that's the biggest one. But I'm gonna put a line basically where I'll be anticipating, move. So right there, right here, that's the top of the next range. And we have this big old imbalance, and then this line as well. So it's kind of like mixing retail in a sense, like support and resistance if you want to think of it that way. But it's not support and resistance. I'm using the order blocks, institutional order flow, and stuff like that. Now right here, like I said, we made a low, took out this low, we failed to break this low, but now we're failing to take out this high. So that's why my hands will be, I'll be sitting on my hands because there's no need for me to force my will. And as you can see, like in terms of retail, I want to see what. So for this trade, if I got in right here, I would have closed when I saw this candle. Like when I saw this candle form with a strong reaction, and then we gapped up with the bullish candle, I would have closed the sells and profit. And I would have been break even. So like if it came all the way up here and almost stopped me out, right? If it comes back and breaks that low, I'm going break even because like it should, after doing all this, it shouldn't come back here. So right here, if I see, like I said, a weird reaction, I'll go break even after breaking that. And then right this, if I see it gap up, I'm gonna go ahead and close the trade out. Because if not, like now I'm giving it a chance just to take me out for no reason. Even though it could literally just come back and go lower. But we don't let a green trade go red, which yesterday I didn't follow my rules because I was trying to chase, and I think I still have it up. But basically, I tried to buy from right here, and like it went up right here, and I didn't close, and then it came back and ripped me because I didn't go break even. Bro, it is really playing games.
Yeah, there's a lot of news over the past 2 days.
Yeah, I think they're releasing PPI today, if I'm not mistaken.
They did.
That?
That's what this morning. This morning at 8:30 was.
So this day is Friday then. Sorry guys. Well, that makes a lot of sense. Well, this is still a good day to learn though, on what we don't want to be trading. So in terms of like Mac asked, what I'd be looking for, like I said, I'd be looking for this to happen right here. But I put this here because like once this happens, it's supposed to break this low. Because it failed to break that high, That's the idea behind it at least. But that's why we say targeted and not it's guaranteed to break once it doesn't break that high. But you see how it made this high, didn't break that high, so we targeted this area right here. But when it failed to break that, then it's going to target that high. Then we sweep that high, and it goes lower. And so this would be a valid break too, internally. But this is why I leave the market in ranges and not market structure. Because look, where have we gone? Just in between these damn lines. We haven't gone anywhere, really. All right. So I guess technically speaking, we would be out this trade. But this is why, you know what I'm saying? It's good to respect your stop loss. But like this is not good action. You know what I'm saying? So it's kind of like a crossroads. Like yesterday, I had the literally yesterday. Oh, I was so pissed. Oh, I'm so pissed. I literally opened a trade on gold, right? I never traded gold. Like I never traded gold on my funded, only on my personal account. So I knew how the lots were. I thought it was like pretty close to being the same as how I would trade the Nasdaq. Wrong. Literally, I opened the lots, bro, and I opened like $5 lots. I thought it would mean like every like dollar it moved on the gold, I'd make it $5, right? Not the case. Every cent it was moving up and down $5. So it moved like 30 cents, and I was down $150. And so I knew it was a proper like alignment in terms of like what I was looking for, but I rushed into the trade and like wasn't respecting the fact that I didn't know what loss to set. I was just like, well, this should be right. And you know what? That if I would have held on to that same trade, it would have ran for about $4,500 in profit. But instead, I lost uh basically 3/4% on my funded account. And so that's why today, like I said, I wasn't gonna trade with the funded, which I'm glad I didn't because look at this mess. Like right here, like this should have gave continuation. You know what I mean? It just broke here, but it's playing around. It all did was sweep and go, did a little grab and go. And the reason I put this SLQ here, all this means is sell side liquidity. So once this sell side liquidity got taken, anyone who's done the lesson with me over consolidation, expansion, this is the consolidation, this is the expansion. So technically speaking, this should be valid to enter off of to sell back down. But if it fails to, then we're just gonna head for this liquidity up here. Now we have, this I don't forget what it's called. Maybe you can help me out, Mac. A pennant, does that sound right?
All right, y'all. I got to step off the call. I'll talk to you guys in a little bit.
All right, bro. See you. So by this time, it's almost like 9:30 ish, and the market's still snailing around. So if I hadn't entered here, I'd probably be done because like now it's not gonna give any proper entries. But you see how like basically off of like the idea of the double sweep, like we got in way early, but this creates our POI. So in the higher time frame, when we see the same thing happen, so like right here, where it took out the high of these wicks and then broke a low, that validated this POI here. And usually it'd be like this area, but since we formed this big old imbalance, and that was part of the down move that broke everything, that's your entire POI. And that boom comes back and it's reacting from there. So to go back, we swept above the high of these wicks, which in the lower time frame would be definitely a high. So it's valid. And then we broke this low afterwards. So we got a sweep and a break, which now confirms this as a POI. And if I don't know if y'all were here when I was talking about it, but remember how I said how this failed to break a high right here? And so when I see this candle gap down on the 15-minute, that's a horrible indication for buyers. So like I could almost, and you could not even almost, you could, but I don't want to teach y'all this because it's like kind of like a cheat code. But if you see this happen, see a candle like this form, a high, then it wicks right here and then gaps down, you can instantly take a sell there and put your stop loss above like this wick. And like Sire, I taught him that for options, and I do fucking smack charts now. So really, it works really well for options, but for forex, like you want to focus on being as like detailed as possible because really like it doesn't really reward you to. Look, it kind of can. It can be rewarding to look for like those little gimme plays, but at the end of the day, we want to be focused on like getting better every day at reading the market. That way, in any situation, especially like the one we're in now, the economy, we're able to react like, depending on how we're looking at things. So from here, like you can see basically, and this would have been a proper stop loss too if you wanted to put it above the protected high. But now you see we're melting. And so this right here, after breaking this, getting that sweep that we've been looking for, because that's like now, that was a 15-minute low that we created. So if that gets taken out, that gives you a lot of confirmation that we can go lower. So I'll go ahead and put 15-minute sweep. And it hasn't broken it yet. So literally if it comes right there, that wick, and doesn't break, expect this whole range to get pushed. But it'd have to engulf above this imbalance first. And to be clear, like, right, we could have taken this trade. We could have taken, one of these trades. We could have taken this buy right here. But at the end of the day, you want to like conserve your mental capital. It's not worth it to make the money if afterwards you're like, like you just came out the war, Like, and I used to be like that. I'd be like, damn, made that $500, but like literally my fight or flight is like my hands are like literally shaking, from like the adrenaline. Now you don't want that. You want to be calm, cool, calm, collected. So usually when I enter right here, after I'm in, I'm just at this point in time just staying objective. Okay, we didn't take out any highs. Okay, cool. We're still going lower. If we take out this high, then I'm still okay. But like right now, I wouldn't even be able to go break even yet. Only time I'll go break even before it taking out this low right here is if it takes out this high first. Then I'm like, why are you doing that? Before breaking this low, and you got super close. And what I've noticed is that usually the lower you come in a range, so this is the bottom of the range, and it fails to break, it's gonna rip. So if I'm at the bottom of a range, I want to see it continue to give me indication that it wants to keep selling down. And I don't expect us to see another setup before my trading session is over because it's almost like 9:30. So we'll probably end the call after this 6 minutes is up. But this would be a great time for y'all to ask me any questions that y'all might have had during the